You got me running, got me running. Shake it, shake it, shake it, shake it. Raise your hands up. Raise them up.
Right, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. It's episode 353. It's the 12th of August, 11 a.m. right here, GMT +8 in Singapore. Okay, so this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we'll be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so yesterday, 11th of August, 8:30 p.m. GMT +8 was the release of the US CPI data. So I'm going to get Kim Hong here, currency analyst at LCMS Traders, to share more about that. Kim Hong. Okay, I think, is that...
Can you guys hear me now?
All right, now we
yes.
can.
Okay, so sorry about that. Yep, yesterday, yes, there was the US CPI data release, okay? So you guys probably seen some market moving actions and things like that. Okay, let's just dive into the data and we will know why. Okay, so what you're looking at right now is the CPI data. So on a monthly basis, okay, for the month of July, we see that the CPI headline inflation, okay, rose by 0.5%. Okay, it actually, well, it's actually as expected, okay, as forecasted to 0.5%, but it actually slows down quite a bit, okay, as compared to the release back in July, okay. Then the core CPI, okay, was, well, it's slightly, a bit off from expected 0.4%, but it's really, really low, compared to the July's figure, okay, of 0.9. Now, that is the main reason why you see a weakening in the US dollar yesterday upon release, right? Okay, so USD end up weakening across the board. And then we see like, euro dollar, pound dollar strengthening at the last minute and things like that, before the market ends early today, okay? Now, that is the monthly figure, okay? It usually creates this short-term effect. If we were to look at the yearly figure, okay, headline inflation actually, okay, rose by 5.4%, okay? It is actually, well, 0.1% better than, higher than forecasted, okay? And it actually was the same value, same rate, I would say, as the previous month, okay, of 5.4. Core CPI wise, there's a slight slowdown, okay, as compared to last year. The previous release in July, okay. But we see that, there's a, I would say a slight stagnation, okay, in the inflation, okay. So believe it or not, okay, this may actually be what the Fed has been saying, okay. Inflation is due to transitory reasons, okay, like temporary rise in prices coming from oil, coming from used vehicles, used trucks and cars, secondhand vehicles, okay. So we may actually be starting to see an impact of that right now, okay. Why do I say that? Okay, first of all, the data has shown that, there's a slowdown in inflation. Second point, I will bring you over to the inflation report, okay. So what you're looking at right now is the inflation report that was released yesterday, okay. If we were to look at the individual components, don't worry, I won't go through all the components because it's not like required, to be honest. The main focus, okay, will be like I mentioned, used cars and trucks. Okay, if we were to look at, previously during the previous sessions a couple of months back, I've been saying that the rise in inflation was mostly due to the main drivers, okay, of inflation in the US and certain parts of the other world as well, okay, is actually due to rise in oil prices and used cars and trucks, okay. But okay, so you see that in April, May, and June there was a 10%, not 10%, inflation for used cars and truck rose by 10. The index, okay, of 10 points, 7.3 points, and 10.5 points. But for July, okay, we see that it actually increased by 0.2. So you see, there's actually a strong, I would say, deceleration, okay, in price increase for the used cars and truck sectors, okay. So, as I would say, as the economy starts to open up, as the whole, I would say, what's that thing called again? The shortage of chips, okay? Shortage of computer chips issue starts to, gets better, okay? Not completely resolved yet as of now, but as it gets better, we'll see an increase in the manufacturing of new cars, okay? Hence, it will lead to, a decline in demand of second-hand vehicles, okay? We may be seeing a start we may be starting to see an effect of that happening right now, okay? 0.2% as compared to the previous 10.5%, 7.3, and 10%, 10 points, okay? So that is for used cars and trucks, okay? The other main driver of the recent rise in inflation, okay, which is the oil prices. This is the one. Well, we see that, there's actually not much change, okay. There's a slight decline, 2.4 from 2.5, okay. So as of now, oil prices are still around there, okay, around that level. So it's not much, it doesn't have too much of an impact, or rather should I say a downward pressure impact on the US inflation as of last month, okay. However, okay, let me take your attention to what the White House actually sent out yesterday. So yesterday, they actually released this statement, okay? This is actually a statement to OPEC, okay? So basically, I'm not going to go through the whole statement. It's just a statement to the OPEC saying that, what, you guys should actually consider to increase oil production, okay? Or rather to ease your production cut, okay? Why is that the case? Because higher gasoline costs, if left unchecked, risk harming the ongoing global recovery. Okay, so yeah, it's actually I would say oil prices, the high oil prices is actually starting to starting to become the limelight, okay, that will catch the attention of the authority in the United States and also in other parts of the world, okay, because of the recent oil prices. I mean, as you know, that oil prices has been going up recently. I think it hit like $70 over per barrel, but I think in recent days, like I think last week or what, it actually came back down below 70, okay? But yeah, so with this whole I would say pressure coming from the different governments of the world, parts of different countries and things like that, not sure if the OPEC is going to, because as we know that OPEC is I would say it's like they're always an independent I would say independent organization, okay? So most of the time they do what they want, right? If they feel that production should be cut, they will cut it. If they should rise production to to satisfy the other members, in terms of having a higher revenue and things like that, they will hike production, okay? But with all these pressures starting to mount up for the OPEC plus, okay, yeah, we may actually be seeing or hearing from them, okay, during I would say probably like the September's meeting, okay, early September, because they hold this monthly meeting, okay, whereby they will discuss about oil production and things like that, hiking of oil production and things like that, okay, or easing. So we may be hearing something from them in September during the September's meeting, okay. Anything on that, I'll update you guys, okay. But nonetheless, the whole point that I'm trying to bring out is that right now we may actually be seeing a stagnation of inflation, okay. So you might be thinking, how will this actually impact the Federal Reserve meeting? The Federal Reserve decision or discussions on QE tapering, especially with the upcoming Jackson Hole Symposium. They may actually be dropping a hint or two on QE tapering. Well, to be honest, if everything is in line with what the Fed is actually projecting, specifically continued strong rise in employment, as we have seen in the non-farm payroll data, and strong rise in inflation, which will eventually tone down, stagnate, back down into their the Federal Reserve's 2% target, then it is highly likely that we will be hearing something on tapering, like maybe carrying it forward or bringing it earlier and things like that. Hopefully a tapering this year from the Fed. So yes, no doubt, US dollar weakened due to the I would say not lower than expected, but the lower inflation release as compared to last month. But the major news, personally, I feel that this weakening in US dollar will be short-lived. It will be just a temporary effect, But the main focus will be what the Fed will be talking about, in the upcoming Jackson Hole Symposium. With that, for the time being, I'm looking at a short-term USD weakening. But just keep if you're trading, just keep your trades short-term and things like that. But don't forget, don't just pay attention to the other economic data releases from the other countries as well. Like today we have the UK GDP and things like that. With that, from now until the Jackson Hole Symposium, we will still be expecting the US flash PMI data, released on the 23rd of August, just a few days before the symposium. And we will also be expecting the second release of the GDP, quarterly GDP from the Bureau of Labor Statistics. So I mean, if those data turn out to be good, it's good for, it will definitely encourage the Fed to, carry out an earlier tapering. But personally, I feel that we already have what we wanted, which is, strong inflation and strong employment. Those two pieces of data, yes, they will contribute to the Fed's decision, but I would say, not that much as compared to inflation and employment. All right. With that, if there's any other things, I will keep you guys updated. If not, I'll hand it back to Jinwei.
All right. Thank you so much, Kim Hong. So how much did the US move? Now we're going to head to the charts with Scott Andrews here from Forex Briefcase Australia, where he's going to share the dollar index analysis. Scott.
All right. Hi, everyone. And look, so frankly, I was calling for a little bit more of a bullish response from the US dollar. Now, in regards to, we did see, so earlier yesterday, we saw the US dollar push higher and actually we did have a touch at 93.17 was the high there. So look, that has been seen as, minor resistance previous, and especially with the recent rally as well. But, what did come out was, I guess the market had some strong expectations in regards to, especially the month on month. And now, with Kim Hong going through what actually makes up that consumer price index, that basket of goods and services, you can see that things are definitely coming back down from, there was almost a sense of, it was like a mania situation. Plus you had all those issues with supply bottlenecks. So, there is commentary about stagflation and things like that. And for now, plays of high conviction where you'd be looking to take full risk, it's not quite really the time for that, just because we've got a situation where, we could see the dollar, come back down to the 92.70s today. And we do have a little bit of news out as well. We've got for today, it's nothing really too significant. We've got the core, we do have core. Let me just have a little cycle down. The GDP stuff for the pound is going to be interesting as well. But the initial jobless claims tonight at 8:30. So what you'd be looking for, if that can come in around 370, 375, that would be good just to help the US dollar just hold up here. And then, later in the week, there's not really a whole lot. So I think it's sort of, the market really had a bit of a breath there. And for now, in regards to where we see, the US dollar going, I would say just holding below 93 is reasonable, and that the other pairs offer some opportunities, such as the pound, which was discussed yesterday in the currency call, especially with the pound news coming out. So I would say just it's pretty neutral with the US dollar. It's not going to weaken significantly, but it's certainly not going to really break out either. So US dollar just for now looks pretty happy, just holding sideways in this sort of tight range, would be fair to assume right now, guys.
Okay, thank you so much for that, Scott. And yeah, today's Thursday, and the currency focus will be yen and gold. And I'm going to get Daniel here, trading coach at LCMS Traders, to share more about that. Daniel.
Hey, thanks, Jin Wei. Yeah, so indeed, last night the CPI data, lots of movements moving in just yesterday night. Okay, so as we take a look at the charts. No, before the charts, let's look at what's going to happen for yen, if there's any news coming in today and for the next few days. So we look at it, all on 12 August, Thursday, we have the PPI data that comes in, but usually PPI data don't really impact too much on the yen pair, so we'll skip that. There's some industrial productions coming in. Japan is a manufacturing country, so they do a lot of exports. So this can have some news coming in, looking pretty well at previous at 6.2. They're most likely going to be pretty stable. Most likely going to be about 5 point something to 6, quite previously similar to previous numbers. Moving in, yes, of course, just remember, everybody remind you that UK has GDP numbers coming up. And then moving down, pretty quiet today. Later on, like initial jobless claims tonight at 8:30, and then tomorrow on Friday coming in. Yes, we have unemployment change, Aussie. We've talked about that already. Coming in, lots of some CPI data in Europe. Then coming in, the Michigan consumer sentiment is coming at 81.2. As Scott has mentioned, most likely it's going to be quite flat coming in right now, especially after the CPI data yesterday night. Then when we look at next week onwards, this is what I'm interested in. That's the GDP numbers are going to come in, right? The GDP numbers quarter to quarter is going to be expected instead of a negative previous quarter or a negative, there's some improvements finally. Some growth at 0.2%. So watch out for this. There may not be a huge movements coming in because overall, we do know Japan is just not exactly in a full recovery state right now. You can see that the COVID is still impacting them, but slow and really the improvements will happen. And okay, so look at it on Monday. So the weekend you prepare for it. I'm looking at possible good numbers here for GDP numbers for yen coming in. So hopefully there was some movements to be moved in. And then if you look further down, not much else coming in for the yen pairs coming in. Okay, not too bad. Queuing of imports, trade balance coming in doesn't really impact too greatly from there. And then you can see a lot down here, nothing much. There's some Japan news coming in, but again, you see not really a big movements coming in. But however, let's look at the charts right now. When we look at the charts, what we are looking at seems to be after, because this is the US yen, CPI data really caused the weakening of the US dollar. However, we do see things like the safe haven currencies, like US yen are actually growing in demand. They want to have more risk on, risk off situation. So right now it's a little bit of risk off. So there's a possibility for this week, and maybe up to Monday, where yen could slowly strengthen. Okay, yen could slowly strengthen up right now. Especially you can see here with the CPI data last night. CPI data quite bad. Rebounds off 110.8. One really very nice bouncing off this resistance here, coming back down. Now, what we'll be probably looking at is with the previous news coming out, CPI data has already impacted in. Of course, there are a lot of news still sentiments, market sentiments that they're looking at is that, hey, US is recovering, tapering is coming, tapering could be coming. We have to hear could be, right? I won't say it is, but it could be coming in. There could be a strengthening of the US dollar, but it could be a wait and see. And so the safe haven currencies for the yen right now could favor against the US dollar. So I'll be looking at right now for this week coming in, and especially on a Monday with the GDP, yen, Japan GDP is going to be a positive number, finally showing some growth. I'm going to look at if it breaks below 110.30 coming in, really looking nice for today, then it will break maybe break further down for this week all the way to next week, Monday, coming back down, slow movements downwards. So I'll be looking at a quick kind of trades here. So maybe somewhere below, breaking below 110.39, probably looking for quite close to about 40 pips of stop loss coming back up, and then you can even go to try to go for about 120 to 130 pips of take profit target, moving down to the previous low. So that's really quite nice. 1:3 risk reward ratio coming there. And as we look at this euro yen, if we look at euro USD beforehand, it is not moving right now. I mean, there was slowly moving down before impacted by the US CPI data, and then now moving across. Most likely, I think it's still going to come back down as what we spoke about last week. Move back up to quite close to 1.17 area, and then slowly moving down with a long-term looking at a possible US recovery because of the possible in their minds about tapering. So looking at euro yen, I'll be looking at, look at this way. It's right in the middle of the support and resistance zone. And, if you look at this, it's like a consolidation phase. If we will look at to do patterns right now, it is a triangle pattern, which tells me the consolidation, right? And they don't exactly can see whether the buyers or sellers, the demand and supply are fighting it right now. We based on the idea that the look at the market is like the safe haven currencies could be coming in for yen, and then euro USD could drop. So I would probably looking at a possible drop to hit the support zone right now. A possible trade will be breaking below 129.35 level. We'll go again another 40 pips stop loss for a coming of a take profit of 40 pips, 1:1. So you can see right here, it's not a favorable trade. Even if I want to take this trade here, it will probably be a quick trade. It's probably maybe like 20 pips or 30 pips if they're moving in a downward direction. This is kind of trades they'll be looking at. But if not, I think the other trades like euro, US yen could be a better trade compared to the euro yen. And last of all, we look at pound yen. We talked about this yesterday. Today we look at possible where the UK GDP numbers could be strong, signaling a very strong recovery, where we saw a ascending triangle coming in, waiting to break against what are the resistance of 153.53. If it really does happen that again, same trading here, break above 153.95, and you could probably be looking at a possible like 50 pip stop loss for an almost 150 pips or 120 to 150 pips of take profit target. But really, you have to wait for the UK news GDP coming in and also break past the strong resistance there before you even consider to take any trade. So you can see US yen, euro yen, and pound yen. I will be more favorable to first price to be the US yen, then pound yen because of the news later on, and then last of all, the euro yen, which is not my favorite trade to be taken for yen. And today it's a Thursday, so it's yen and gold. So let's look at the gold trade right now. Now, gold has been really impacted very strongly. This news coming down, you can see a range throughout all my support and resistance that for that day alone. Look at this, about 800 pips coming back down. Right now, you can see that it is being impacted by the weakness in last night's CPI data, and that's where it happened growing. What I'll be looking at is long-term wise, if you look at the long-term wise, I think it's probably going to still slowly move down. Really, it's because of the US dollar could be long-term strengthening in. Okay, so looking at it, you can see here, it is quite close to my resistance zone here. Okay, so I can see here. So I'm looking at a possible downward directions coming in, right? To maybe how much pips for today. It could be looking about almost 200 over pips. But I think this is for the whole week of data coming in. Okay, we have to see any more other news coming in, but you can see any US news coming in could very badly affected this gold trade. Okay, so I'm looking at possible downward trend. It won't break, not yet breaking above the resistance of 1761 level. So a short-term trade for gold will be a downward trend moving towards 1719 from the current 1749. Okay, so that's what I'm looking at for gold. Chinwei.
Okay, thank you so much, Daniel, for the yen and gold analysis. Yeah, so just a reminder here, a disclaimer, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So remember to do your own analysis prior to entering any trades. Okay, so don't just leave yet. I'm going to get Daniel here to share a little bit about any trade ideas that he shared yesterday in the Wednesday live coaching session with the Traders Club members, Daniel.
Yes, Leon, last night really was, we started at 9 o'clock, a group coaching session. So just for everybody to know, every Monday, we have a group coaching sessions at 8 p.m. And then on Wednesdays, 9 p.m., we have a live trading sessions together with all the club members. 9 p.m. is because we want to wait for the US market to be open. So really in the club here, for a lot of these trading sessions, it is to show the club members how we prepare for the trade. I'll know what you're doing, so that you don't have to be the computer every day. You know how to prepare and could be selected to trade the timing together. We trade together and make profits together. Now, if you look at the market yesterday, as I repeated again, it's actually after 8:30 CPI data, we were looking at the trades and CPI data was really looking very bad. So we had a few trade ideas looking at the US dollar weaknesses. For example, Aussie USD, we were looking at break above 0.7383. New Zealand, we must break close above 0.7050, and many more all the US pairs coming in, but a lot didn't activate until only for the Aussie USD. It did go up, but unfortunately it turned back down pretty quickly as well, so we had to close off the trade. So we must know not every time we make the trades, but however we did continuously look at the market right then. We had a couple of trade ideas that we share with you. One of the shares I've shared with you, like today yen, we were looking at that point in time, looking to close below 110.30, which that's why I mentioned to you. If it close below that, we'll look for a possible close trade because of the recent news of the CPI data quite bad and bouncing off resistance there. Looking very nicely trade setups, and we're waiting for this trade to be happening right then. Okay, and then the other trade I would like to share with you, looking in is, with the, Kim Hong already mentioned about the oil prices is growing stronger, and it is because we look at the oil prices and you see it's really very nice, bouncing off this quite close support and moving our direction. So, just to leave with you guys, one of the close trade we're looking at is to sell below 1.2488, coming in a possible trade all the way coming down. So again, it's something to watch out for. And we actually not only live trade, we prepare the trades for members what to watch out for based on fundamental and technical news. And then of course we discuss a lot of questions and answers from the members here, where we say about what will happen if the economy is recovery, what will central banks will do with the inflation, would it be acceptable, transitionary, what it means, and we'll do a lot of discussion, explanation, and our club members really like it a lot. So for those who are already a member, so do remember to join us on Monday 8 p.m. and Wednesdays 9 p.m. sessions. Now, if you are not a member right now, so what I will be encouraging you to be doing is to join the LCMS Traders Club, right? This access to the club membership is worth thousands, right? It is really worth thousands coming in, but it's already a chance right now to join at $49 a month only. Now, this is without the doubt the least you could do to join and achieve your best in trading when you want to trade in Forex. So the price can change anytime, but you can see here we have lots of members loving our this club platform here. We not only have the group coaching sessions, we have the Forex Signals coming in, daily analysis, market watch, and many more just for club members to be at your peak performance when you do your trading. So okay, you come in here at $49 a month, fill it up, and I'll see you in the club.
All right, thanks for that, Daniel. And I've just pasted the links in the chat. Just check it out. Click on the website and find out more. Yeah, so we have come to the end of the session. We'll see you guys tomorrow, Friday, for the Canadian dollar and cryptocurrencies. Thank you so much and goodbye.